Okay, welcome everybody. My name's David Wolfin, President and CEO of Avino Silver and Gold Mines. This is our presentation for February 2024, A Clear Path to Transformational Growth. We control the destiny of the company, and over the next 5 years, we're planning a major expansion, several expansions. And I'll get into in the presentation. This is to let you know I'll be making some forward-looking statements. Here you can see Avino's located in Mexico. The mine is in the state of Durango, the heart of Mexico. It's on the Sierra Madre Silver Belt. Billions of ounces exist on this belt. We have 100% Mexican labor force, 450 people right now, right up to our chief operating officer. Project portfolio. So the producing Avino mine produced 2.4 million ounces of silver equivalent last year. This year, we're planning to produce between 2.5 to 2.8 million, slight increase this year. La Preciosa is a development project. We announced this year that we've got the community approvals to go ahead. So we've applied for an underground mining permit. So we're hoping to get that in the next few months. And then we can start preparing the underground, the surface works to go underground and then haul ore to the Avino mill, processing mill about 19 kilometers away. And the Oxide Tailings project, this is a project that we've known about a long time. It's the already been produced waste from when we opened pit mine in the 70s and 80s. Which we couldn't develop because it was an active tailings dam. So we've deactivated it. Now we're moving that project forward. We've got a large silver equivalent resource base, 371 million ounces of silver equivalent. So highly levered to the price of silver. 60% of the silver equivalent is actual silver. The rest is gold and copper. So these are the catalysts for growth. We own them. It's not M&A activity that's going to drive our growth. It's organic from these three assets. Growth milestones. So the completion of the acquisition of La Preciosa in March 2022. Land surface agreement in January 2024. It took a while because there was many communities. The reason why there's many communities in this area is because of Avino. Avino is the oldest mine in the state of Durango, goes back over 500 years. So the beauty of that is infrastructure and people and towns and communities. So it took a while. But we got that done in January. We completed converting traditional tailing storage to dry stack. So that was a $10 million investment. It's fully operational. We're backfilling our open pit right now, which is a form of reclamation. Oxide Tailings Project, NPV, 98 million. That's pre-tax, after tax with a 5% discount, 61 million, equivalent to our current market cap. So the market's not factoring this in right now. So Avino is tremendously undervalued. And we can get into more of the reasons why later. La Preciosa Gloria veins. So the Gloria vein comes right to the surface. That's where our first target for the first several years is to get onto the Gloria vein and start mining there as soon as we get the permits. And then to drift down to Gloria from the surface is only 300 to 400 meters to get to what we're calling level 1. And so if we get the permits in the next few months, it's quite possible we could be into fresh ore by the end of this year. Successful operation last year, drilling operations last year, 7,500 meters. We came up with those results. We've extended the Avino mine to depth significantly and intersected one of the best holes in the company's history, over 55 meters of 300 grams silver, and within there was 3 or 4 meters of over a kilogram. So it just shows that the mine's not running out. There could be something much more significant at depth. So after 500 years, it's the gift that keeps giving. ESR designation. So this is an independent panel in Mexico, and we're quite proud of this because we meet all the requirements of a socially responsible company. Digital transformation, mill automation, underground truck tracking. These are all things to modernize what we're doing to help improve efficiencies. Recent updates. So yeah, production 2.5 million to 2.8 million ounces of silver equivalent this year. 700 to 750,000 tons are planned to be run through the mill this year. Our capital budget is between 7.3 and 9 million. And includes surface work. Most of that is to get mining onto La Preciosa. Probably 4 or 5 million of that is dedicated to that, and sustaining capital on Avino. Pre-feasibility study on Oxide Tailings project completed. Link to the full news release February 5th right there, so you can get all that information, and we'll be posting that technical report within the next month, and so you can get all the details you want. It's probably a 300 to 400 page document within 45 days. Community agreement signed with La Preciosa, so I mentioned that already. Here you can see the Oxide Tailings project pre-feasibility study. This is the timeline. So we drilled the exposed bench in 2016 and did a preliminary economic assessment in 2017. There were recommendations to grid drill the tailings, but we couldn't because it was an active tailings dam. It would have been too dangerous to put a drill rig on top. It would have sank. So we focused our energies from 2018 to 2020 on mining in the underground and expanding the mill. In 2020, when COVID hit, we decided to keep the mine closed for about a year and a half. We let the tailings dry out, and then we were able to drill it. And we did 3,854 meters of drilling, and we kicked off a pre-feasibility study in 2023 and delivered that recently. So here's the economics. So 61 million post-tax NPV, 5% discount, 26% post-tax IRR, 3.5 year payback. And then pre-tax 98 million, pre-tax IRR 35 million, payback 2.9 years. Capital cost 49.1 million, and the cash cost per ounce is under $10, $9.71 for silver equivalent, and then all in sustaining $10.23. So we're thrilled about this. It's going to be a cash cow when we get this thing built. Adding to the growth profile, 6.1 million tons, more than doubled the tonnage from the PEA, because the PEA only drilled the exposed bench, the first bench of the tailings. So the rest of it was covered. So when we put in 150 drill holes into the tailings, we more than doubled the tonnage. The grade, 55 grams of silver and 0.5 gram of gold. That's almost what they mine in Nevada, right out of the ground. So this is really good grade. No mining costs, just reprocessing and some handling costs. So this is why this is a really good project for us. Nominal rate, 2,250 tons per day, 821,000 tons per year, 92% plant efficiency, 9-year mine life. So the highlights: metal recovery, 77% silver, almost 75% gold. And the thing is, we opted not to put in a grinding circuit, so the Capex is lighter. So that's why the recoveries are where they are. But it was a trade-off study, and 9 million ounces for the life of mine, 76,000 ounces of gold. Direct employment, 121 employees. Additional jobs will be created in the near surrounding communities that provide services. Ease of construction is located right on our existing land, so all the infrastructures there, the power, water, roads, are all well established. Local economy benefit, 50 million to Mexican tax contributions, 140 million to local economies. So it's really going to help the local area. Q4 in full production, financial results, Q3. Here you can see in Q4, production was down year on year, and that was simply because of mine sequencing in a lower grade area of the mine. but that has turned around in Q4, and in January of this year, we're seeing improved grades. So we're excited about that. So Q3, 12.3 million, up 3 million from both Q2 and Q3. So our financial results are improving. Mine operating income, 2.4 million, 5.3 million year to date. Cash flow from operations, 1.8 million, 4.1 million year to date. Adjusted earnings, 1.6 million, or a penny a share, 2 pennies year to date. Working capital, 7.4 million, up 2.8 million. So yeah, our balance sheet is improving since the acquisition of La Preciosa, which cost us $20 million. So we're really focused on trying to build our treasury again. Again, here, revenues, 12.3, the information I just mentioned, EBITDA, 700,000, and adjusted earnings of a penny a share. Cost per silver equivalent ounce. So the cash cost, 16.9, all in sustaining, 22.69. We expect this to go down as we mine higher grades. So this is not indicative of what our expectations are. Cost per ton. So here you can see the cash costs from 45 to 59. Our optimum cost per ton is between probably around 50, 55. So once we're into good grade, you'll see these costs drop substantially, and all in sustaining cost per ton. You can see it bouncing around, but we expect it to level off this year and be probably around the 65 to 70 range. La Preciosa. So here's our future. So La Preciosa is 19 kilometers away from Avino, paved road, door to door. You can see it's in farmland. There's farms all around there. So it's not in a remote area. It's a safe jurisdiction. It's very busy. So we've never had any problems there. We've got a 20 kilometer dedicated power line capable of 5 megawatts. We're only utilizing 3. So we have excess capacity for the Oxide Tailings project. Paved road, high water supply, 100% Mexican labor force. So here you can see 1,500 drill holes into La Preciosa. This was done by Orco, Pan American Silver, and Coeur Mining. If you added up the value of 1,500 tons, the cost would have been close to $100 million to do all this drilling. So it's been de-risked from our point of view. So it's a very well understood deposit. Here you can see high grade. The red represents above 500 grams of silver. There are lots of kilogram hits in there. So we're thrilled about getting in here as soon as possible. It's really going to make our whole combined operation very profitable. 17.4 million metric tons, 200 gram silver equivalent average in the measured and indicated category, or 113 million ounces of silver equivalent. And then there's another inferred 4.4 million metric tons, or 24 million ounces. Here's a long section of what we're going to do with La Preciosa. So we're going to put in the green is a decline ramp and haulage ramp. We're going to ramp down in there, put in 7 levels on Gloria, which is on the far left. And then we're going to drift over to Abundancia to the right. We'll mine upwards, and then we'll drift over to Martha. So over the next 5 years, this underground development work's going to happen. It'll be paying for its own development because we'll be mining high grade on Gloria. But ultimately, we want to be drawing ore from all 3 areas out of one haulage ramp and one portal. So it's very efficient what we're going to be doing here, and we'll be able to deliver substantially more ore over time as we open up these 3 areas. Here you can see when we announced the surface right agreement with the Ejidos at La Preciosa, we immediately began hauling ore to Avino. This is surface stockpiles that were brought out of the Gloria vein back in the 80s by a Mexican company called Lewisman. They were a large private Mexican conglomerate, and they were bulk sampling there. So we sampled that material and we started hauling it to Avino. So that's going to boost our production this year by 100 to 200,000 ounces of silver equivalent. So we're thrilled about that gift from acquiring the property. It'll help offset the expenses of putting the decline in on Gloria. Here you can see, so measured and indicated, 277 million ounces of silver equivalent, and then another 94 million inferred, which makes up the 371 million ounces of silver equivalent. And this is all 43101 compliant Canadian reporting standards, which are the highest in the world. Here's our production profile over the next 5 years. So the dark blue represents Avino, or the lighter blue represents the La Preciosa. And then in 2028, we add the Oxide tailings. If we can shrink the timeline on Oxide tailings, we will. We're trying to be conservative here. We're basically planning community engagement this year. So the community engagement, because Oxide Tailings project, even though it's on Avino, it's a new project because it involves leaching. So we're going to need a permit and we're going to need community engagement. So that's going to happen this year. If all goes well, next year we could start permitting, do a feasibility study. By the end of 2025, we could make a construction decision, and it'll probably take 1.5 years to build it out. So it's possible that the Oxide tailings could contribute in 2027, but we just put it out to 2028 to give us more time. But the goal is to get up to 8 to 9 million ounces of silver equivalent annually, which would then put us in the intermediate category. And intermediate producers are 6, 7, 800 million market cap, and we're at 60. So you're looking at 10 times the value once we get there. Here's a production profile by metal: 46% silver this year, 20% gold, and 34% copper. And so as we get into mining La Preciosa, our silver production is going to grow. And then when you get the Oxide tailings in there, it's going to maintain it for many, many years. Research coverage, various different brokerage houses. You need to contact them if you want to get their reports and see their target prices, but it's much higher than where we're trading at now. Market cap around 60 million US, 52-week trading range, 40 cents to $1. We're trading at the low end of that. And the thing that happened since March, April last year is Coeur Mining started marketing the sale of the 14 million shares of Avino they had acquired when we bought La Preciosa. So this action by Coeur really hurt the value of our company because there was a lot of shorting. More shorting in the company's history. So our stock basically dropped in half. And so it's not just that we're saying we went down with the rest of our sector. We had that happening as well. So we're extremely undervalued. If you look at the NPV of the Oxide tailings with proven reserves, I mean, it's going to add to our balance sheet. Our current assets are well over 100 million, and we're trading at 60. So our price to net asset value is really low, and so it's very attractive. If you're bullish for metal prices, it's a cyclical business. It's not going to go away, so it's going to turn around at some point. And what analysts are feeling is when interest rates start to go down, which the U.S. is saying that's going to happen this year. So larger shareholder, myself, I have over 3 million shares, and the rest of management and directors own a large amount. So I put my money where my mouth is. More than that, I worked in the mine as a teenager. My father founded the company. So I learned the business from the ground up. And I tell everyone when they ask how much skin I have in the game, I said I have blood, sweat, and tears. I worked in the mine. And so I've been with the company for many, many years now. Negotiated to buy out the other half of the mine in mid-2000s because when my father created the company in 1968, there was no NAFTA. So foreign ownership could only go to 49%. And he felt that's better than nothing with an operating mine. So we built the mine in 74 and it ran for 27 years, closed in 2001 due to low metal prices and smelter closures. And then mid 2000s, I became president and negotiated to buy the other half of the mine out and put the mine back into production in 2011. So we've been operating for over a decade since that time. So there's 130 million shares outstanding and 140 million fully diluted. So why invest? A primary silver producer and explorer. We're not one or the other. We're both. We do both. So you have the ability to gain from either or. The Preciosa land agreement, that was a big milestone for us in starting to haul ore from La Preciosa. Longevity, 56 years, proven track record, large endowment of metals, 371 million ounces of silver equivalent. So decades of mine life, undervalued on a price to net asset value and enterprise value per ounce by many multiples for the reasons I explained. And our balance sheet is growing. Since we paid Coeur, we're now focused on building our treasury. So the 5-year goal is a strategic plan to grow organically and achieve intermediate status. The largest expansion in company history. We've had several over the years, so we've been able to deliver on that promise.
David, could you tell us about your background and career?
Sure. So as I briefly mentioned, I grew up in the industry, worked in the mine in the early 80s. I was a teenager. And then what else did I do? I worked on the floor of the Vancouver Stock Exchange. I was a phone clerk. I took orders from the office and ran them out to the traders. I was this close to becoming a trader, and then the crash in 87 hit, and I got laid off about 6 months later. But I stayed in the industry. I later got a job as a broker assistant to a senior partner at a firm, Continental, which became Yorkton, Frank Juch's company. But then my father invited me to come join him in the late 90s, early 2000s, because he had several public companies. He was funding junior mining companies and needed help. So I went in there and I was doing investor relations work, worked my way up for a decade or so, and then became an officer, a director in the 90s, and then in the mid. So when the mine closed in 2001, I approached my father and the board of directors, and I said we should buy the other half of the mine because NAFTA was in place and foreign ownership could go to 100%. And so I was appointed president in 2003, I think it was. Took about 3 years to negotiate with the Mexican family, private family, wealthy family, but huge family, 14 members broken up into 3 groups, and they didn't talk to each other. So it took about a dozen trips down there to convince them to take shares of Avino because I wasn't offering cash. Didn't have it. I needed a story. And so they eventually agreed in 2006, and the stock exploded. It went up to over $4 a share, raised a bunch of money, reassembled the team. We did 30,000 meters of drilling between 2006 and 8 and made a new discovery. So when the global financial crisis happened, we shut down drilling and focused on refurbishing the plant. And we commissioned the plant about a year and a half later. It was 2010, 2011, and then ramped it up over the 5-6 years from 250 tons per day to what we're at now, 2,500 tons per day. So it was a big expansion in the mill. So a lot of experience, decades of experience. I worked in the field in Nevada as a teenager. My father would send me there and to keep me out of trouble in the summers. So I learned geology, took geology in university, and business, and so that's my background.
Nathan, could you tell us about yourself and your career?
Where do I start? Not too exciting. Went to school here in Vancouver, and then started working with one of the big four accounting firms at Deloitte. Spent a number of years working there, primarily with mining clients, publicly traded NYSE and TSX listed clients located all over the world. Got to travel a lot. Went to West Africa, got to go to South America, Mexico, Nevada, all over Canada as well too, to a number of our different clients. And then eventually made the jump over to Avino. I guess it's been almost 8 years now. And I've been in the CFO role for about 4 years. 5 years almost. 4 years. 4 years now on a permanent basis.
Could you summarize Avino's capital structure with regards to shares outstanding, warrants, options, debt, working capital, etc.?
So we have just under 130 million shares outstanding. Those are all common shares, no preferred or any weird structures like that. Fairly tight for a company that's been around for 55 years. We have no warrants outstanding. We had some existing warrants that expired earlier in 2023. And the only diluted options there's options and restricted shares, about 8 or 9 million, I believe, at the end of the year. So just under 140 million fully diluted. And right now, our balance sheet is fairly clean. The only debt we have on the books is equipment debt. That's with our partners at Caterpillar and Sandvik, who finance a lot of our mining equipment in Mexico, and that's only about $3 million. And working capital is up from earlier in the year, actually right around 9 or 10 million. I believe it'll come in right around there but at the end of the year, and as of today, fairly similar.
So with that, let's start with the mining. So you could, last year, you substantially increased the throughput to, you averaged 1,700 tons per day, but this still, far away from the nominal plant capacity of 2,500 tons per day. Could you describe the way to approach 2,500 tons per day?
Yeah. So the plant capacity, like you said, is 2,500 tons a day. But right now we are running 6 days a week. That's partially due to some labor constraints. We'd have to have another additional shift just because of some of the overtime laws in Mexico. But also just due to our maintenance schedule. And I know that does cap our plant availability around 85%, or 6 out of 7. There is room to go up to another day, or at least run another shift on the 7th day, which would get us a little higher in throughput. However, the current schedule does allow us to avoid any major downtime and keeps our maintenance fairly on schedule and on track. So the plant 6 days a week is running around 2,500 tons per day. And I can confirm that for January, we should be right around that rate on a 6 out of 7 day basis.
Super. So on a 6 to 7 day basis, what does that equate to in terms of, that should equate to?
Yeah, should be about 2,200 tons per day. If you over 7 days. I think as we move forward and as La Preciosa enters the fray, we'll consider more if it's cost effective to go to 7 days a week, and just thinking about additional labor costs as well as our maintenance schedule costs, because some components in the mill are a bit on the older side, even though Circuit 3 and Circuit 4 are quite new and modern. So we do have to be careful, and we don't want to stretch the mill to a point where it's not running properly and we see a bit, some sort of major downtime.
Regarding mining, what mining rates do you think are achievable at the Avino operation? So Elena Tolosa as of now.
Yeah. We've had as high as 3,500 tons coming from underground on a daily basis. So we're definitely not mining constrained. It's definitely a mill constraint at this time. And then obviously we've got, potential, La Preciosa as well in the coming years. So, we are part of our 5-year plan near the tail end of that could contemplate some expansion in the mill, as we do have room, and the way the current operation is configured with 4 independent circuits, we could add a 5th circuit potentially, or replace the 2 smaller ones with a larger circuit similar to our Circuit 3 and Circuit 4, which are about 1,100 tons per day.
Thank you. So with that, I think we should head into the mining.
Yeah.
So in 2023, you mined lower grade areas, but that changed at the end of the year in December last year. So how does the mine sequence look for 2024, and could we expect similar grades like 2022?
Yeah, stronger than last year for sure. we the mine sequencing was part of it, but also the pillars that we build underground. So some of those it's not an easy thing to do. So it hampered our ability to mine in a particular area that was higher grade. And there was a fracture in one of the pillars, so we wanted to replace it with concrete. So that took some time. But we don't anticipate that this year. We expect to have higher grades.
My follow-up question to that would be, so the recoveries were also lower last year. What recoveries could we expect for this year?
It's dependent on the grade. So as you get higher grade, you get higher recoveries. So we expect our recoveries to improve. Plus, I mentioned we were doing mill automation. So because some of the mill is old, right? The initial circuits go back to the 70s. The older ones, the larger ones, are automated. So the people in the mill are used to the younger generation like the automation because they can look at the monitors and see what's happening live. So the initial circuit, the smaller ones, were more analog. So it took more experienced people to understand if there was inefficiencies there. So we've been updating it with more sensors and to improve recoveries.
In the beginning of this year, you announced that you obtained the Land-Lease agreement from the local ejido at La Preciosa. Could you explain the significance of it?
Yeah, well, ejidos are a coalition that are in municipalities. So they reside over what goes on the surface of their municipalities. We own the mineral rights. So in order to get the mining rights, you need their blessing. And so it took a while because there's a lot of people to talk to. But we did it. I mean, they're pro-mining. They want jobs. We're the number one employer in this region because it's just farmland. So it took a while, but we got it done, which is a testament to our people down there. And then once you have the surface agreement with the ejidos, their blessing, you file with the environmental department for an underground mining permit, which was what recently, immediately following the blessing, we had it ready to be filed. So it could take 2 or 3 months to get that permit, but we don't see any issues because it's not a major disturbance. It's just a portal and a haulage ramp, and then trucking over to Avino like a satellite deposit, like we mined in the past with San Gonzalo.
How much stockpile ore sits at La Preciosa, and what is the average grade of them?
So there's 50,000 tons, which we've been pretty open with the market about. As soon as we signed the land use agreement, we did another comprehensive sampling program. So some of the material is definitely development material, but over half the material is good grade, actually higher, or if not around the resource grade at about 200 grams silver. And we've had some samples even come back with a couple grams gold, which is fantastic. So that's over half of that we'll no problem going through the mill at current metal prices and turn a profit on that, even with all the haulage costs. The development material is some of it's lower grade, closer to 100 grams silver. And so it's marginal, but it'll help us better understand just the mineralogy at La Preciosa and get us more familiar and get the circuits fine-tuned. So there will be some advantages there, even just running some of that material.
Awesome. And what remains in terms of permitting for La Preciosa?
So for La Preciosa, we have submitted the MIA, or I guess it's the environmental disturbance permit for mining and extraction in Mexico. So that has been submitted, and by law you get a response within 90 working days. So we're expecting to hear something back within that time. Our team is fairly confident we will get the approval, but obviously we need to wait and see if we have to make any modifications or anything, because it's a very comprehensive submission. Lays out any environmental disturbance that we will have, and also covers things like explosives and things like that for underground mining.
The timeline, impossible, but do you have a ballpark range for the timeline?
Yeah, so I mean, we need by Mexican law, we should have a response within 90 working days. So that's, at the very least, that'll be an approval, or they'll ask for some modifications. So once we get that, and if it's an approval, obviously fantastic. We start development very quickly, and that could be as early as within the tail end of the second quarter or into the early Q3. And then development work begins. And I think the timeline we've been pretty upfront to the market with is around 6 to 7 months for fresh ore to be coming from the underground from La Preciosa. So we'd be looking at early 2025 with potential for the tail end of 2024. But that would be for fresh ore production.
What Capex is associated with the development, at least this year's development,
Yeah.
provided that you can start?
Yeah, I mean, very timely. We just put out some of this guidance this morning, or I guess afternoon for yourself. So we're expecting about 3 to 4 million in development Capex this year. We've got a lot of the equipment already, and it's really just development costs over at La Preciosa and some surface costs. And that's just to develop the Gloria vein. So that's about 1 million tons worth of material, which is quite significant, obviously, given the expected processing rate we have between Avino and La Preciosa. That would fill our two smaller circuits for quite a long time. So yeah, we expect, for the full development is about $5 million. And so some of that would be in 2025. But again, over half of that we're expecting would be 2024, but we're budgeting about 3 to 4 million.
Will that require extra funding? And if so, how will you secure that?
Yeah, so when we set out with the initial plans earlier or tail end of 2022 and early 2023, we did have expectations we'd have a bit more cash flow from Avino to fund all the development. Obviously, the stronger Mexican peso has had some impact on those plans in 2023. We do still expect Avino to be contributing cash flow to this, and our financials will be out next month. But even up to Q3, we were generating cash flow from operations. We also have an active ATM that's fairly low cost of capital. We pay about 2.5% in fees for that, and obviously no brokered financing is planned for anything like this. And then another option, obviously, is always there. We have a lot of concentrate traders coming at us for prepayment options on La Preciosa or even with our current contracts. But again, our preference is to keep the balance sheet as clean as possible and also issue as little equity as possible, given where the stock is trading right now. So ideal scenario is that the cash flow generated from Avino is able to fund all the development. But if we have to add on, we do have other tools in the toolbox.
Could you outline the development plan for La Preciosa?
Yeah, so we've already started hauling material that was there, historic material, clean up the site. There is surface buildings there that Coeur Mining and Pan American put in years ago, so don't need a whole lot for office. Core storage is all there. So basically it will be putting in a fence, bringing in some temporary buildings for geological and surface management, but then putting in a portal and a decline. So it's going to be real simple.
So with that, I think we could move on to the Oxide Tailings project. You released the PFS. Could you explain the improvements and changes from the PFS if you compare it to the PA,
Preliminary Economic Assessment contemplated heap leaching. So because we're in a populated area, we have decided that heap leaching is an eyesore and probably wouldn't be received well. So we looked at dynamic leaching contained into tanks and enclosed in a building. So the capital expenditure is more, but it improves the efficiency. The leaching time is faster. The recovery rates are faster. So it's more valuable. And the footprint is smaller. So that's why we changed. It took years for us to do a PFS because it was an active tailings dam. We couldn't put the drill on top. So we had to grid drill it. We had to do metallurgical test work. And now we delivered a positive PFS with proven and probable reserves the first time in history. So you can't get any better than that. Proven reserves, that's as high as you can go. That's the safest thing you can have without having any surprises. So it was a beautiful surprise that we drilled it and doubled the resource, because the middle area of the tailings was covered. So we didn't drill that in the PEA. We just drilled the bottom bench that was exposed.
And can you explain the steps in terms of advancing the Oxide Tailings project?
The next steps, so like I said, community engagement, because this is a new thing. It's not bolted on to Avino. It's a 2,250 ton per day Capex or size of operation, 49 million Capex. So there's leaching involved. So we're going to need the blessing of the local town, and we're going to need permits. So those are the two main things. And then if we want construction finance, we'll do a feasibility study, a bankable feasibility study. If our finances are really good by then, maybe we just make the decision and build it out ourselves and don't go to a bank. But at the moment, we're doing it the traditional way through these studies.
How long is the construction period for the leaching plant and associated infrastructure?
About 18 months.
If we then move on to the Oxide Tailings project, what permitting exercises remain for that?
Yeah, so that project, obviously, that's a fully different new processing plant, separate area, obviously at the Avino property. So there's a lot that we do need to undertake. The first step is community consultation and engagement with the local communities surrounding Avino, many of which are familiar with us. So we do expect, hopefully that there'll be some good buy-in with this. But obviously, it's a very different process of what we're doing at Avino. This is a process that's going to involve cyanide. So there's permitting aspect for that. It's going to be contained in leach tanks. So not a heap leach operation or anything like that. So it's quite a lot more palatable for the local communities and for the environmental regulatory bodies as well too. So long way to go on that one. But the main thing is, community consultation is what we're working on now. And then obviously we'd have to go apply for cyanide permits.
What is the expected? Do you have any expected timeline?
So right now, I think the focus again is, we've been pretty upfront about this, is La Preciosa. We'll be doing some community consultation in the background and thinking about the permitting aspect of it. And obviously we'd have to make a decision on if we want to move to feasibility study, which would be the next step. And that would be something we'll probably have to decide next year in 2025. And then permitting would have to coincide with any of that. Obviously, if you can get your permits sorted out before you go to feasibility study, it makes it a lot easier and there's less risk and questions from the market. So we'll do what we can to move things forward. But I wouldn't expect any news on permitting this year.
And so in other words, tank leaching, it's much better from an optic perspective and also from a permitting perspective. But are there any advantages, or what are the advantages from a technical perspective?
Yeah, because I know obviously we comment the original PEA contemplated a heap leach operation, which was a much smaller scale operation and just focused on the higher grade ancient oxides, as we call them. There's about just under 3 million tons, or right around 3 million tons. And so the PFS really expanded on that and is now up to 6.7 million tons of reserves. So the increased plant size, as well as the social considerations, and obviously there's some improvements in recovery that we'll get, because some of the more recent material is lower grades than the ancient stuff. So to get a couple extra % of recovery on the lower grade stuff is very meaningful and continues to help us helps us to demonstrate the economics, the positive economics of the project, and increase the mine life. So those are the main reasons why we switched to tank leaching, and there were some other metallurgical concerns with heap leaching. So I think the team, our VP of Technical Services, and our consultants at Tetra Tech spent a lot of time going back and forth. But tank leaching was definitely determined to be the most economically beneficial option, as well as the most environmentally strong alternative.
And of course, there are a couple of years out until you're going to build this, and hopefully your share price by then will be significantly higher. But could you still walk us through potential ways to fund that initial capex of $49 million US?
Yeah, that's a fair question. We've gotten that question a fair bit since we put out the results. And again, we just want to highlight to everyone, La Preciosa is still the focus: lower development costs, lower upfront capital. And so the long-term funding this project, we feel will be a mix of cash flow generated from both Avino and La Preciosa. There will be probably a debt component as well too for project financing, and that's part of, Avino now has mineral reserves for the first time in its history. We have a pre-feasibility study, not a feasibility study, but a very detailed pre-feasibility study that gets us most of the way there. So if we wanted to go out for project financing or some type of secured credit facility, we would go to the feasibility study and do whatever we can to lower our cost of capital on the debt side. And then we do have the equity option as well too. Obviously, our share price is quite depressed at the moment, as with many in the sector. So it's a good thing we're not planning to raise the money tomorrow. So I think we've got some time to think about how exactly is the best way to fund this. And I think we're going to go with what's the best cost of capital for us. Obviously, we've got a lot of tools at our disposal with the ATM and the NYSE listing. But I think for us, we'd rather not, again, we're shareholders. We'd rather not be diluting ourselves, all the way down just to make this project happen. So I think given the economics, there will be an appetite for folks to come in and come along for the ride with this project. I mean, it's got a $10 per ounce all-in cost for a 9-year or 8.5 to 9-year mine life. So we know it's a great project with good economics. And so once investors and banks and lenders digest the information, we feel confident the interest will grow.
And but as it stands now, you're looking to build it on the pre-feasibility study.
We haven't made that decision yet. I think taking it to feasibility study would make sense if we wanted to borrow for a significant portion of that Capex upfront. Because a lot of the banks will want to see a defined feasibility study versus the pre-feasibility study, just lower risk from their perspective, and that means lower cost of capital from our perspective. And that's, again, as I mentioned, along with permitting, that's the decision we don't need to make this year, but a decision we'll be thinking about in 2025 or early 2026, because we expect it to be, once we make a decision and get funding secured, it's probably about an 18-month build. And I think as of right now in our 5-year plan, we're not modeling anything until as early as 2028 right now.
Could you add some color to this year's exploration plans?
We're not planning much in the way of drilling because we're trying to build our treasury. We did prove that we extended the mineralization to depth on the Avino mine. And so over the last couple of years, we retained the services of 2 world-renowned structural geologists to help us figure out the geology. Typically, you do that before you build a mine, but because Avino's been around for 5 decades, it hasn't happened. So the beauty of that is the extent is unknown. So the recommendations from those guys are to update a fluid inclusion study and resample things. So there will be a form of exploration going on, but not from drilling. It'll be updating our knowledge of the results for future drilling. And also at the Avino mine below the developed area, so we've extended the mineralization substantially. We'll make plans for that area, but we're not planning to ramp down to that area this year. We've got several years of mine life blocked out. So we really want to work on building our treasury.
Awesome. So it's a cost-effective target generation. So what's the plan for your non-core assets and also the San Gonzalo mine? And could some of them perhaps be monetized?
San Gonzalo was a mine, so there is some remnants of ore there, but we closed it down in 2018, 2019. So there's no plans there. There is potential. We've done some surface exploration to see if we can find the extensions laterally. We did some drilling below the bottom level 7, but it's a low sulfidization deposit, which is different than Avino. Avino comes up from depth. Low sulfidization seems to go laterally. So finding the source is like a needle in a haystack. We don't know, because if you look at the overhead of Avino, there's dozens of veins. We're structurally controlled by two offsetting faults that went in opposite directions, and in between it fractured everything. So there's veins all over the place. So it's like a jigsaw puzzle. It's not a simple thing. So we stopped mining in 2019. Doesn't mean we'll never find anything. It's just when we have the budget to go do that type of exploration, we're focused on mining what we know. That's more brownfields exploration for the future. And other non-core properties. So we spun out 2 properties to our sister company. It was a little shell company we had in the office from my father's days. And our VP of Technical Services, Peter Latta, and Nathan, our CFO, came to me and said, we spun out Braylorn a few years ago. Why don't we spin out some of these non-core assets that are costing the company money and let a sister company in our office pay for it? So we created Silver Wolf, and it's earning an option on those properties. Other than that, there's not a lot of other things. We sold a property to Hecla in the Yukon territories, up by United Keno Hill. We've also sold the Braylorn. And then we optioned out the Olympic Minto claims to Endurance in British Columbia. So we're focused just on Avino, and that we've got our hands full, and we're laser focused. We don't want to be. The problem is with a lot of juniors is they dissipate their energies. They get too many properties and they can't handle them all, especially when times get tough. So we have a clear path to transformational growth. That's our tagline. It's clear. Avino, La Preciosa, Oxide, Tailings takes us to intermediate status. So we don't need to do anything else to get there. It's just focus on that. And so that's where we're at.
Thank you. And with that, we have arrived at the final question, which is, where do you envision Avino silver and gold mines in 3 years?
Well, if you look at our 3 to 5 year plan, so it's on the graph, you can see the production profile. Our cost, we expect to drop. So when we bring in Oxide Tailings, you saw all-in sustaining $10. So that and higher grade from La Preciosa. So if we can get the all-in sustaining between $10 and $12 in the next 3 to 5 years, we'll be a cash cow. And so it's hard to say in 3 years, but if you look at our 5-year goal, if we could speed up development of La Preciosa, speed up the Oxide Tailings, we will. If we can afford it, we will.